Good afternoon, this is Clayton Ream with Van Ahn & Company with your afternoon grain and livestock closing comments for September 15th. Well, yesterday's crop conditions report showed soybean good to excellent ratings down about 2%, giving the soybean market a little bit of a boost here, up 5 cents today, reaching all the way up near 10 cents throughout the day at one point. But with the positive movement that we've seen in corn and wheat the last couple of days, we actually saw a little bit of profit taking and near-term sideways down action, with corn down about 3 to 5 cents throughout the day. Struggling and trying to come back to follow beans a little bit higher, just wasn't able to muster up that strength. Meanwhile, over in wheat, just not a lot of new positive or bearish information, but down about 9 cents as the position squaring and the kind of the fund flow of the markets takes its time and place, as we usually see them buy for about 2 days and then a little bit of profit taking, and then we really assess the issue to see if there's additional strength left in these markets. So with the USDA crop report behind us and showing a little bit tighter stocks, and the condition reports starting to show some deterioration slightly, which is normal with reaching maturity, we expect maybe there's some additional upside potential here. The new focus of the market now comes into the demand equation of the side of things, and we're going to continue to watch export sales. There were no private sales the last couple of days, so we need to see those sales start to come up again, especially for the soybean market to hopefully tighten up that balance sheet a little bit more to give our producers, grain producers, a little bit better price. Also on the tip of everyone's tongue quickly coming upon us is the September 30 stocks report, and USDA did downtick old crop bean carryout. So in the last report, so we expect our stocks to be a little bit tighter than maybe expected as we work forward, as there may be some revisions to last year's production and demand as well. So over in corn, though, it seems like everything is kind of in line, so we don't expect for too much shift there, but that's going to probably give it a little bit of additional support in the markets and sideways action. And we're hoping and we're looking for this to be our potential pre-harvest low, that we probably shouldn't go back and challenge those, as this is now the demand timing of the equation when we already have the supply known. So key focuses there to pay attention to is the demand, and then the upcoming reports, and then obviously money flow. In the livestock markets, the cattle markets had a rough day. Meanwhile, the hog market jumped up near limit here this afternoon, which is kind of interesting, as we haven't really had anything new in that market, but it just looks like additional portfolio readjusting, and it looks like the numbers maybe aren't coming in quite as expected. So it seems like that cheaper pork is moving a little bit better in beef as well. So that encourages a little bit of premium to be taken away compared to that cattle market that's holding quite the price premium over the hog board. In the outside markets, that's helping kind of push all this money around a little bit, is all eyes focused on the FOMC and the Fed meeting here this Thursday, and the potential uptick in interest rates. On the forefront, that interest rate hike should be nothing too dramatic for the marketplace, but it sure has a lot of people talking about it, and going to probably create some additional volatility. So we'll probably expect them, not a lot of confidence, but to show some confidence in our economy and potentially show those uptick in interest rates. So crude market was about 70 cents higher when I came back here after trading near steady just an hour ago, and the stock market is rallying off of those news. So as always, trading futures and options provides risk and loss and is not suitable for all producers. Have a good day.